At 9 a.m. Moscow time this morning, a button was pressed, a transaction was executed, and the 50-year American monopoly on global payments began to die. Russia, China, and Iran jointly activated a cross-border payment system that bypasses SWIFT completely. Not a pilot program, not a test environment, not a press release promising future capability. A live operational system processing real transactions in real currencies between three nuclear powers and their trading partners. The first transaction was symbolic. An Iranian oil company sold 2 million barrels of crude to a Chinese refinery. Payment settled in digital yuan. The entire transaction, from initiation to confirmation, took 7 seconds. It never touched a single American bank. It never crossed a single American server. It was completely invisible to the United States Treasury, the Federal Reserve, and every sanctions enforcement agency in Washington. SWIFT processes $5 trillion in transactions per day. It is the central nervous system of global finance. It is how money moves between countries. And for 50 years, the United States has used it as a weapon. We have frozen accounts. We have blocked transactions. We have excluded entire nations from the global economy with the push of a button. That weapon just became obsolete, not someday, today, this morning. While you were reading headlines about celebrity gossip and political theater, the most significant financial event of the century occurred. Let me show you exactly what just launched, who is joining, and what it means for every dollar you own. To understand why today's launch is historic, you need to understand what SWIFT is and why controlling it has made America untouchable for half a century. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. It was founded in 1973 in Belgium. It is a messaging network that connects over 11,000 banks and financial institutions across 200 countries. When you wire money internationally, when your company pays a foreign supplier, when a government settles a trade agreement, the instructions travel through SWIFT. SWIFT does not move money itself. It sends messages, secure, standardized messages that tell banks to debit one account and credit another. But without those messages, international finance would grind to a halt. Banks would not trust each other. Transactions would take weeks instead of seconds. Global trade would collapse. For decades, SWIFT was genuinely neutral. It processed transactions without political interference. But after September 11th, everything changed. The United States gained access to SWIFT data through the Terrorist Finance Tracking Program. We could see every transaction. We could monitor every payment. We could track money anywhere on Earth. Then we went further. We realized that SWIFT was not just a surveillance tool. It was a weapon. If we could see all transactions, we could also block them. We could exclude any bank, any company, any country from the global payment system. This is called the nuclear option of financial warfare, and America has used it repeatedly. Iran was disconnected from SWIFT for its nuclear program. Their economy collapsed. Oil exports plummeted. Inflation exploded. Ordinary Iranians suffered immensely. We threatened to disconnect Russia after the Crimea annexation. The threat alone caused capital flight and currency crisis. North Korea was disconnected entirely. Their access to international trade became nearly impossible. After the Ukraine invasion, we did what we had only threatened before. We disconnected major Russian banks from SWIFT. We froze $300 billion in Russian central bank reserves. We demonstrated that even sovereign assets were not safe if you displeased Washington. Every nation on Earth watched. Every central bank took notes. Every finance ministry asked the same question. If they did this to Russia, could they do it to us? The answer was yes. Absolutely yes. Any nation that depends on SWIFT depends on American permission to participate in the global economy. Until today. Let me walk you through exactly what went live this morning. Because this is not a single system. It is an integrated network of multiple systems that together create a complete alternative to Western financial infrastructure. The network has three primary components. Component 1. CIPS, the Cross-Border Interbank Payment System. This is China's alternative to SWIFT, launched in 2015 but operating at limited scale until now. CIPS allows international yuan transactions without touching dollar-based systems. As of this morning, CIPS is fully integrated with the Russian and Iranian payment networks. It processes transactions in yuan, rubles, rials, and a basket of other currencies. It connects to over 1,400 financial institutions in 110 countries. Here is the critical difference from SWIFT. CIPS is not just a messaging system, it actually moves money. It clears and settles transactions within the system. This eliminates the need for correspondent banks, which are typically American banks that process dollar payments. The entire transaction happens without any U.S. involvement. Component 2. SPFS, the Russian system for transfer of financial messages. This is Russia's domestic alternative to SWIFT, developed after the 2014 sanctions threats. Until now, SPFS was primarily used within Russia. It connected Russian banks for domestic transactions. As of this morning, SPFS is fully interoperable with CIPS. A Russian bank can send a payment message through SPFS, which routes through CIPS, which reaches any participant in the combined network. Russian banks no longer need SWIFT for any transaction with China, Iran, or the growing list of participating nations. Component 3. CPAM, the Iranian Financial Messaging System. Iran has operated outside SWIFT since 2012. They developed CPAM to maintain domestic banking operations. Until now, CPAM was isolated. As of this morning, CPAM connects directly to both CIPS and SPFS. Iranian banks can transact with Russian and Chinese banks seamlessly. Iranian oil can be sold to Chinese refineries with instant settlement. Iranian imports from Russia can be paid without touching a single Western institution. But the real significance is not the technology. It is the agreements that support it. The three nations signed a trilateral settlement protocol at the BRICS finance ministers' meeting last month. The protocol establishes several critical provisions. Provision 1, mutual currency acceptance. Each nation agrees to accept the other's currencies for bilateral trade settlement, no dollars required. Provision 2, central bank swap lines. Emergency liquidity is guaranteed between the three central banks. If one nation needs yuan, rubles, or rials urgently, the others provide it. Provision 3, open architecture for new members. Any nation can apply to join the network. The protocol specifies the technical and legal requirements. At least 15 nations have already applied. Provision 4, sanctions immunity. This is the key provision. All three nations agree that no member will be excluded based on sanctions imposed by non-member nations, specifically American sanctions. They have created a sanction-proof financial zone. Inside this zone, American financial weapons do not work. Trade continues regardless of what Washington demands. Let me give you the numbers from this morning's launch. In the first 6 hours of operation, the combined network processed 847 transactions totaling $2.3 billion equivalent. The largest single transaction was the Iranian oil sale to China at $176 million. The smallest was a payment of $4,200 for industrial equipment. The average transaction settlement time was 11 seconds. On SWIFT, the average is 24 to 48 hours due to correspondent banking delays. The new system is not just independent, it is faster. Who is joining? 11 signs to 15 so. The launch this morning involved Russia, China, and Iran, but they are not alone. The queue to join is growing rapidly. Let me show you who has formally applied and who is actively negotiating. Confirmed participants already connected to the network. Belarus joined immediately. Their banking system was already integrated with Russia's. The connection to CIPS was technical, not political. Myanmar joined last month. Under Western sanctions since the 2021 coup, they had no choice. SWIFT access was already restricted. The new system offers their only path to international trade. North Korea is connected through Chinese intermediaries. They cannot directly join due to their complete isolation, but Chinese banks can process their transactions through CIPS. Venezuela joined this morning. Their representative was present at the launch ceremony. Years of crushing American sanctions have pushed them firmly into the alternative system. Formal applications pending approval. Saudi Arabia has applied. This is the seismic development. The kingdom that created the petrodollar, that has priced oil in dollars since 1974, has formally applied to join the SWIFT alternative. If approved, Saudi oil could be sold in yuan, rubles, or the new BRICS unit. The petrodollar would be dead. United Arab Emirates has applied. Abu Dhabi and Dubai are major financial centers. Their participation would give the network access to Gulf capital and trade flows. India has applied, the world's fifth largest economy. They have already been settling oil purchases from Russia in rupees. Full integration would formalize existing arrangements. Turkey has applied, a NATO member seeking access to the alternative system. Their application signals how far the break with American financial hegemony has spread. Indonesia has applied, 275 million people, the largest economy in Southeast Asia. Their participation would tilt the entire region toward the new system. Egypt has applied, gateway to Africa, control of the Suez Canal, strategic importance that cannot be ignored. Countries in active negotiation. Pakistan is negotiating terms. Their close relationship with China makes participation likely. Bangladesh is negotiating. Manufacturing hub seeking to diversify payment options. Nigeria is negotiating. Africa's largest economy. Major oil producer seeking alternatives to dollar pricing. South Africa is negotiating. Already a BRICS member. Integration is expected within months. Argentina was negotiating but paused after their recent election. The new government is reconsidering. Let me give you the combined statistics. The current participants plus pending applications represent approximately 3.8 billion people, 47% of global GDP on a purchasing power parity basis, 65% of global oil reserves, 70% of rare earth minerals. If all pending applications are approved, the alternative network would include more economic activity than the SWIFT-dependent West. The majority of global trade would have an option to bypass American financial infrastructure. This is not a fringe movement. This is the majority of humanity building an exit from dollar dependence. You might be thinking that SWIFT alternatives have been discussed for years. CIPS launched in 2015. SPFS launched in 2014. Why is today's activation different from the announcements we have heard before? The difference is integration. Previously, these systems operated in isolation. CIPS handled yuan transactions within China's network. SPFS handled ruble transactions within Russia. They were parallel systems, not connected systems. Today's launch integrated all three systems into a single interoperable network. A payment can originate in Tehran, route through Moscow, settle in Shanghai, and convert currencies automatically along the way. The technical barriers are gone. The difference is also volume. Previous CIPS and SPFS usage was limited. The systems existed, but were rarely used. Most international transactions still flowed through SWIFT because it was easier, faster, and more widely accepted. Today's launch came with volume commitments. Russia committed to routing 80% of its trade with China through the new system by year-end. China committed to settling all oil imports from Russia and Iran outside SWIFT. Iran committed to complete SWIFT independence for all transactions. These commitments create critical mass. When 80% of Russia-China trade flows through the alternative system, banks must connect. Merchants must adapt. Infrastructure must build. The network effects compound. The difference is also political will. Previous SWIFT alternative discussions were hedging strategies. Nations wanted options in case America weaponized SWIFT against them. But they still preferred the dollar system. It was convenient, it was familiar, it was default. The 2022 Russia sanctions changed the calculus permanently. When America froze $300 billion in Russian central bank reserves, the hedge became an imperative. No nation that might ever displease Washington can safely hold dollar reserves. No nation that might ever face sanctions can depend on SWIFT. The political will to actually use the alternative system now exists, not as a backup, as a primary channel. Today's launch demonstrated that the will has converted to action. The difference is also timing. The launch was coordinated with the BRICS expansion announcements, the 19 new BRICS applications, the petrodollar expiration, the de-dollarization momentum across the global south. This is not an isolated technical event. It is part of a coordinated restructuring of global finance. The SWIFT alternative is one piece of an integrated strategy to end dollar hegemony. Today's launch signals that the strategy is now operational. Let me explain exactly how a payment system launched in Moscow this morning affects your daily life in America, because the implications are profound and personal. First, American sanctions become toothless. For decades, the threat of SWIFT exclusion gave America enormous leverage. We could dictate terms to any nation, comply with our demands, or be cut off from global finance. That leverage is evaporating. Any nation that joins the alternative network can trade with other members, regardless of American sanctions. We can exclude them from SWIFT. They will simply use the other system. Iran has survived under crushing sanctions by trading with China through back channels. Now those back channels are a superhighway. Other sanctioned nations will follow. Our ability to economically coerce adversaries through financial warfare is ending. Second, dollar demand is structurally declining. Every transaction that flows through SWIFT requires dollars at some point. Banks hold dollar reserves to settle international payments. Central banks hold dollar reserves as insurance. Every transaction that flows through the alternative system requires $0. As volume shifts, so does demand. Less demand for dollars means lower dollar value. Lower dollar value means higher import costs. Higher import costs mean inflation. This is not theoretical. It is mechanical. The volume that launched today, 2.3 billion in the first 6 hours, would have required dollar settlement yesterday. Today it does not. Tomorrow there will be more. The drain has begun. Third, Treasury demand is falling with dollar demand. Foreign central banks hold dollars primarily as reserves for international trade. They invest those dollars in Treasury bonds. This finances American deficits and keeps interest rates low. When nations reduce dollar reserves because they no longer need them for trade, they reduce Treasury holdings. This is already visible in the data. China has reduced Treasury holdings by $400 billion in 3 years. Russia liquidated completely. Others are following. The $2 trillion annual deficit must be financed. If foreign demand declines, domestic buyers must absorb more. To attract domestic buyers, rates must rise. Higher rates mean higher mortgage costs, higher credit costs, higher government interest payments. The fiscal doom loop accelerates. Fourth, global prices are repricing away from dollars. Oil has been priced in dollars since 1974. If Saudi Arabia joins the alternative network, if Gulf oil can be settled in yuan, the dollar premium on oil disappears. Other commodities follow. When commodities reprice into multiple currencies, their dollar price becomes more volatile. Americans face imported inflation from currency fluctuations they cannot control. The stability that dollar dominance provided evaporates. Fifth, American financial institutions lose revenue. The correspondent banking system generates billions in fees for American banks. When international payments flow through SWIFT, JP Morgan, Citibank, and Bank of America process them. They charge fees. They earn float. When payments flow through the alternative system, zero revenue reaches American banks. Every transaction that moves is revenue that disappears. Bank earnings decline. Bank stocks decline. Your retirement portfolio declines. So how do you position yourself when the foundation of dollar dominance is cracking? What actions should you take when SWIFT alternatives go from concept to operation? Step 1. Accept that the dollar's special status is ending, not someday, now. The launch this morning was the moment when alternative infrastructure became operational reality. The transition that was theoretical is now practical. This does not mean the dollar collapses tomorrow. It means the trajectory has shifted. The margin of safety has narrowed. The consequences are approaching faster than consensus expects. Adjust your mental model and your portfolio accordingly. Step 2. Diversify out of pure dollar exposure. If your entire net worth is in dollar-denominated assets, you are fully exposed to dollar decline. Bank accounts, bonds, stocks of purely domestic companies, all dollar risk. Consider international diversification, funds that hold non-US assets, stocks of companies with global revenue, exposure to currencies and economies that are participating in the new financial architecture. You do not need to abandon the dollar entirely. You need to reduce concentration. A portfolio that was 95% dollar exposure should become 70% or 75%. The balance should be in assets that benefit from or are neutral to dollar decline. Step 3. Build a physical precious metals position. Gold and silver are the neutral settlement assets. They are accepted in every country, every currency system, every financial architecture. They are what nations hold when they do not trust each other's currencies. Central banks in Russia, China, and the BRICS nations have been accumulating gold at record rates. They understand that the transition period will be volatile. They are holding assets that maintain value regardless of which currency system prevails. If you have $500, buy 15 ounces of silver, physical metal in your possession. This is your foundation outside the dollar system. If you have $2,500, buy 70 ounces of silver and a quarter ounce of gold. Begin building meaningful exposure to neutral monetary assets. If you have $10,000, buy 250 ounces of silver and 1 ounce of gold. Consider splitting storage between home and a private vault. If you have $50,000, allocate $12,000 to $15,000 to physical metals. 400 to 500 ounces of silver, 3 to 4 ounces of gold. Consider allocated storage outside the banking system. If you have $100,000 or more, target 25% to 30% in physical precious metals. Consider international storage in Singapore or Switzerland. Mirror what central banks are doing. They are preparing for a multi-currency world. You should too. Step 4. Reduce long-duration treasury exposure. Long-term government bonds are ground zero for the risks we have discussed. If foreign demand declines, if rates spike, if inflation accelerates, long-duration bonds will suffer massive losses. Move to short-duration instruments if you must hold fixed income. Treasury bills, money market funds, anything that matures quickly and can be repositioned as conditions evolve. Step 5. Consider commodity exposure. In a world of competing currency blocks, commodities become the common denominator. Oil, copper, agricultural products, these are priced globally and needed universally. Commodity producers benefit from de-dollarization. Their products become more valuable in local currency terms as the dollar weakens. Mining stocks, energy stocks, agricultural stocks provide exposure to this theme. Step 6. Monitor the transition closely. The launch today is the beginning, not the end. Watch for Saudi Arabia joining the network. Watch for trading volumes shifting. Watch for central bank reserve composition changing. Each development accelerates the transition. Each announcement brings the new financial order closer. I track these developments and share analysis on this channel. Subscribe and turn on notifications. When major shifts occur, you need to know immediately. At 9 a.m. Moscow time this morning, the SWIFT alternative went live. Russia, China, and Iran processed $2.3 billion in transactions without touching a single American institution. Saudi Arabia, UAE, India, and a dozen other nations are lined up to join. The 50-year American monopoly on global payments is ending, not in the future, now, today, this morning. But the payment system is only one piece of the new financial architecture. There is another component that launched simultaneously: a digital currency system that will allow instant settlement between any participating nation. It eliminates the need for dollars in international trade entirely. And it just completed its first cross-border transaction. I break down exactly what that digital system is and how it will accelerate de-dollarization in this video right here. Click it now. The alternative financial system is not coming. It is here. Make sure you understand what it means for your money. I will see you there.